Hello Market Club members everywhere. Adam Harrison here, coming to you from the digital studios of Market Club. It's Wednesday the 16th of November, and we have a midweek rally going on in some of the markets, but not in others. But let's take a look at one market in particular where this situation has come up with a Japanese candlesticks. You don't see this very often, so when I saw it, I wanted to share it with you. And what we're looking at today is what they call a morning doji star, and I'll show you what that formation is right now. So I'm going to get my screen pen on, and I'm going to just circle this right here. These three little candlestick bars. So the first one's very down. This is what they call a doji right here. This is D-O-J-I. And the move up here created what they call a morning doji star. And usually that indicates that you put in a bottom. Now the bottom right here, this case, would really be around 14. Now the negative on this is the fact that all of our trade triangles are negative. Minus 9, not a good sign. And also you're below the 50 bar. But what I wanted to share with you was just this particular formation to see how it turns out. So it's indicating that this is probably an important low in this stock. The stock we're looking at is ABX, which is Barrick Gold. So we could look at this in the weeks ahead and see how it works out, but nonetheless this is a very strong indication in Japanese candlestick terms that the market's made a bottom. Also, you have a bit of a divergence. You can see we have a low here and a low here, and then we have a lower low, which is right here, but this is actually higher. So this has gone up like this. So the momentum vanished on the downside, and it looks as though it's trying to make a turn back up. But again, you've got lower lows here and here, but the momentum isn't falling. You can see right here, you can see there's a low, and this is actually slightly higher. So again, low here, but the momentum isn't following. Plus you have this morning doji star. So let's see how that plays out. Okay, the first time in several days we've seen some sort of pullback, not a big one so far in the Dow. They seem to like Donald Trump as the president-elect. All of our trade triangles are in fact green, besides this one looking red. It's actually green because we had a reversal the same month. It usually doesn't happen. Very, very unusual circumstances. But certainly the trend in the Dow is on the upside. A little bit of a different picture in the NASDAQ. You can see the NASDAQ is still very much on the defensive and negative. Even though it's up today, it's still on the defensive. So I would be a little bit concerned. I would get more enthusiastic if we were to move over these levels right here, which is right around the 5350 area. Whether that's going to happen or not, I don't know. I'd just be very, very careful with these mixed signals, with the Dow being up and the NASDAQ being down. So let's take a look at the S&P 500. What's interesting with the S&P 500 at the moment, it's kind of like in no man's land. We have a monthly trade triangle still negative, in a weekly that's positive, indicating a sidelines position. So unlike the Dow, which is all green, positive energy on the upside, and the NASDAQ, which is down, the S&P 500 sort of split in the middle here, so it's sort of a sidelines position. And I think that's probably the best place to be at the moment. I think there'll be lots of opportunities if this market continues and wants to go higher. So let's move on and take a look at gold. This is the December contract for gold, and you can see it's sort of just been going sideways for the last 4 days. Very oversold. If we scope this down just a little bit, you'll see what we're talking about. We have a somewhat of a flat divergence here, a little bit of a divergence, but nothing dramatic. And what I mean by divergence, I've talked about these before, is the fact that you have a low here, and then you have a lower low, but in reality this is just going up very slightly. So the momentum isn't following the downward move in the RSI indicator. So something to be aware of. You also have a green daily trade triangle, which means you should be on the sidelines right now in gold. What that means is that we trade gold using the weekly right here and the daily, these two. We don't pay that much attention to this one right here. It's basically because it's a much shorter term market, but with the weekly being down and the daily being up, it means it's a sideline position. And that, my friends, is the best place to be right now in gold. It's interesting in Barrick Gold, the ABX, which we looked at earlier, it's a gold mining company, and it's indicating that it wants to go higher. So let's see how that plays out. This is the last market for today, and this is the crude oil market. You can see basically we have a daily that's positive right here at 44.63, And you can see we're 45, 42 right now. That was the indication to come out of any short positions. The weekly, however, is still negative, and the daily is positive. Again, we trade these markets, the futures markets, based on a weekly and daily trade. So the weekly is the trend right here. The weekly is the trend. This is just for futures in gold, okay? And the daily is for timing. You see these rules at our website with our portfolios. So take a look at those. But nonetheless, it looks as though we talked about this before. And again, you have this sort of divergence. We have this is going like this, and you have prices going like that. That's a positive divergence. So something to look at. And again, we really hasn't turned yet, but it looks like it's trying to make a turn. And again, we have to watch this very carefully the next week or so and see if it has made a turn. So I'm Adam Hewison. Thanks for stopping by. Thanks for watching this video. Thank you for business, and we appreciate it. And we're going to have some exciting markets coming up here in the not too distant future. So stay tuned.